It's recording now.
Now it's recording.
Okay, so now we'll behave. All right, which problem are we working on now, that 2 and 3?
Yeah.
What did she say?
Yeah, chapters 2 and 3.
Yeah, the last one?
The last problem, so under part 4?
Yeah.
Oh,
There's only
Except-
one question.
Oh, is it?
Yeah.
It's based
Yeah.
on the,
That's the short answer, right?
Yeah.
under part 4?
I can't.
I mean,
Yeah, it's like this is
I
like
think I made-
2017, 2018.
I think I made it multiple choice questions.
Thank you.
Oh, okay.
Remember?
Oh, that's what you want
Yeah,
to
you
do?
said, I get it. I remember that now.
Yeah.
Is it
Prepare
under
the
the week
income
7?
statement and the cash
Short
flow
term.
statement?
It's in the week 7 spot?
I got it
Yes.
now,
The
okay.
last
Sorry.
I don't know, whatever, it's here, I guess.
So I because
That
some
was part of
students
school.
are pretty strong in accounting, and some are like have no idea. Yeah. So maybe we can help each other. I know you guys just finished accounting. Maybe you guys can figure that out by yourself. You see the template? I was working on the exam questions. I was using the template, and it's quite convenient.
Convenient? The exam?
No,
The
the
example,
calculator.
or the
Oh.
template.
Oh, okay. Some of us are a little slow working. So,
Sorry, I'm slow. So the question with information given, I'm only asking you to prepare the income statement and cash flow statement. Yeah, see, it seems pretty simple question.
well, she said it's simple.
Yeah, well, it seems very simple question, but you have to have the very, you have to very understand the concepts of, you have to be very well prepared, like with your accounting knowledge. You have to, not the expert in accounting, but you have to know the basic ones. You have to know what is income statement, what is cash flow statement. So you know, and then you know what we're talking about here. So if you have no classes before for accounting, and it may be you may try to learn something by yourself to get information, like by watching some videos on YouTube for like what's income statement. What you guys want to watch it? There are some like it can explain. It explains to you what is like financial statement. What are incorporated in the financial statement. You guys want to watch it? Or not necessary?
We can watch it.
Yeah, it's really short video. I think I usually have those classes. I have those videos for the undergrad. Let's see. Yeah, this one. So let's watch two videos. One is called Experts Explain Financial Statement, and then another one is the cash flow statement. Nancy, can you turn off the light? Thank you. I don't know, there's no sound. Something. Oh yeah.
Before making any investment in a company, we really want to understand the three financial statements of that company. The balance sheet, the income statement, and the statement of cash flows. You really want to understand at a DNA level, how is this company performing? The balance sheet is a picture of a business as of a certain day, and it shows assets versus liabilities and the difference between those two, which is equity. It's a snapshot. The profit loss statement or the income statement shows revenues minus expenses, and that gives you profits or losses. Now on Wall Street, rightfully in this case, many analysts focus on the income statement, and there's a lot of attention on earnings. And there's a good reason for that, because if a company is making money or generating profits, that's a good thing, obviously. The third statement, the statement of cash flows, blends the balance sheet and income statement together. It's almost like a merger of those statements, but it's one that is neglected often, and it shouldn't be, because the statement of cash flows measures how cash is going into a business and out of a business. By the way, when you look at the statement of cash flows, there's one single line that you really need to focus on, and it's the cash flow from operations line. Because that shows you over a certain period of time how much cash came into a business and went out on an operating level. And it accounts for both income statement activities and the balance sheet. Now, look at this like a symphony or just a coming together of musical instruments. If we look at those three statements together and we feel good about a company's snapshot and its profits and its cash flow, we will get a good general idea as to whether this company qualifies for even analysis or investing. It's not a cure-all, but it's a great starting point.
Let's just focus on the cash flow statement. Okay.
Cash flow refers to the movement of cash into or out of an account, a business, or an investment. When cash inflows exceed outflows, this is generally considered to be a sign of good financial health, both for individuals and companies. Ed makes his living running Ed's Carpets. For Ed, cash flow is essential to the survival of his business, as well as his personal finances. Having ample cash on hand ensures that Ed can pay his employees, his creditors, and himself on time, keeping the business afloat. The same goes for Ed. He needs enough cash in his personal bank account to pay for his house, his car, and other personal expenses. Whether we are talking about Ed or his business, there are generally three types of cash flows. One, operational cash flows refer to cash received or spent as a result of a company's business activities. For example, a business like Ed's Carpets brings in cash by selling carpets and sends cash out to pay employees and suppliers. Similarly, Ed pays himself a salary, providing cash flow to his personal account. Cash will flow out to pay for his expenses, such as food and housing. 2. Investment cash flows refer to cash received or spent through investing activities. Basically, the purchasing and selling of assets that will help grow the business, or in the case of Ed, assets that will help increase his net worth. 3. Financing cash flows refer to cash received through debt or paid out as debt repayments. For a company, issuing stock, paying down debt, and repurchasing shares would count as part of financing cash flows. For Ed, financing cash flows include any cash coming from loans or other types of debt, as well as payments going to pay down debts. If Ed's business comes up short on cash and is unable to pay its obligations, it will experience a cash flow crunch. To avoid insolvency, Ed will have to arrange some type of financing or a bridge loan. A similar situation in Ed's personal accounts would also have disastrous effects that could lead to personal bankruptcy if the cash flow crunch persisted. For this reason, it is important that businesses and individuals manage their cash flow carefully and set aside emergency reserves to cushion any unexpected events.
Yeah, that's all. All right, so I know it still look like very hard to those have no background in accounting yet, but anyhow, you see over here. So there are four calculators. So this is it's empty, but this is a balance sheet. So when you read information given like in the question, you can you can try to pick the numbers and fill it up like for how much is the cash. So you can read the question and then put in the number if it's asking you to prepare the balance sheet. But however, if for this, you see balance sheet has two parts, right? Three parts: assets, liability, and equity. So assets has to equal to liability and equity, right? So because liability and equity is where the money come from, assets is how you spend it. Just like we have lots of properties, and that's like assets, and we have salaries, and we have other ways to earn some income. That's like liability and equity here. So it has to equal, because the money you got and from somewhere, it has to be equal to like the money you spend on assets. So it has to be equal. So you see, for assets, there are two major components. One is current asset, which is like the most liquid assets. It includes like the major components for current assets is cash, accounts receivable, inventory, and other current assets. You guys have no problem, right? What's accounts receivable, inventory, right? I just assume there's no questions for like the concept, the meanings of these words. Yeah, and fixed another major one is called fixed asset, right? Because it's just like long-term investment for like properties like this. So and then so it has to, you add up current and fixed, so that's your total asset. So and current liability is like accounts payable, notes payable, all these short-term debt. And also there are long-term debt, it's called long-term liability. And then, right, so you can add it up, you can come up with this total liability. Also there's another major one, it's equity. Stockholders, like how stockholders information, common stock, return earning, and you can add up total liability with total equity, so that gives you total liability and owner's equity. It has to equal. These two numbers has to equal. You can read the question here, let's say, and then fill it up. And it has to equal. If it's not equal, it will tell you it's wrong. For example, for this calculator, for example, I just put the number. So if it's not, I'm just using some numbers. You see, so wrong, so please try again. So it has to match. The total asset and total liability and equity has to match. Because the money you got has to be like, where does the money come from? That's liability and equity. Where does it go to its asset? It has to equal. It has to be matched. Okay, so this is balance sheet, and there's also another one. Let's give it a try for income statement. You can prepare in the exam. I'm asking you to prepare income statement based on the information given here. You should try to prepare like income statement for 2018. So now prepare income statement and cash flow statement. You see, income statement tells you how much money has been, how much is the revenue, how much are the expenses, and also how much is your profit or losses. That's income statement. What happened from it's referring to like a specific year. But balance sheet is like a summary or snapshot of the status, financial status of the company by the end of that fiscal year. But income statement tells you like what happened in that year. So it's different. So want to give it a try? Yeah. 2018, yeah. You can use it. You see, whatever the company, the size or industry, whatever, it has to be follow this kind of flow of information. Always start from how much is the revenue generated, and to like how much are the expenses. Starting from the expenses for cost of goods sold, and then there are other expenses, including interest payment and tax. And then when you fill it up, and you will get the net income. Net income is just a profit. Let's give it a try by reading the information. By the information given, you should be able to work it out. You see, so you can use this template. It's not that difficult to prepare for the income statement. The major ones, see, you use sales minus cost of goods sold, minus depreciation, minus administration cost, and other operation costs. You get EBIT, EBIT. That's called operating income. And then you subtract the interest expenses, and you got taxable income. That's called EBT. And you subtract tax, and that's net income. And you subtract dividend, and that's return earning. Return earning is the money the company can put away for like future. It's like the saving they can put away for that year. So got it? You guys know, I mean, you guys finished this already?
No.
No, yeah.
Listening to you.
Yeah, you see, start from sales. Yeah, you just fill it up. It will do the calculation. For example, I'll just come up with some numbers. And then, yeah, see, I just want to show you. You see, so that's how I can add a number. For example, so you just like, all you need to do is just how much is the sales, how much is cost of goods sold. You don't need to add negative sign in the front. Yeah. Yeah, exam question, because I worked on the exam question, I got everything ready. So I'll give you a table like this. It's information you can use to prepare income statement and cash flow statement. And then I have multiple choice questions. I'll ask you how much is your operating income, how much is your, for example, net income, how much is your taxable income, these.
Okay, got it.
Yeah, but it's a multiple choice questions. So 2018, because income statement is for a specific year.
Right.
So let's calculate the income statement of 2018. Yeah, and you see sales, right?
Right.
Yeah. Sales. Cost of goods sold. COG is cost of goods sold. Yeah, COG.
I knew that.
Yeah, depreciation.
Depreciation, so would you use?
Oh, no, I think it was, I should put this to 2018. So 1760, sorry for that. Yeah.
Okay. And that should be added to
1760.
2018.
Yeah,
Okay.
it's a mistake.
All right, and then administrative costs.
Yeah, if it's nothing, just put 0.
Okay,
Yeah.
so if you don't see the category, it's 0.
Yeah, in the exam, I think it's the same. You put 0 for administration and operation.
Okay.
So you see, you got the EBIT.
6423.
Yeah, so what it is just sales minus. Subtract this, subtract this, and you got this. You can do that mathematically. You can calculate yourself,
Right?
right?
And then the next.
So for accounting, you guys had the accounting class. You follow the rules. You don't question. You don't question for anything. They tell you to do that, you do that. Right?
Yeah, she doesn't have, she only went, right now we're just at operating income. She has to put in the right
Oh.
expense, yeah.
No,
Interest
see,
expense is 510.
interest paid. See, interest paid
That would be
is
extra.
here. Now, tax paid.
Yeah, and then tax paid. But interest expense and interest paid is the same thing, correct?
Dividend,
Interest expense and interest paid is the same thing.
yeah, I didn't put dividend. I thought there's a dividend.
Because it's your expense.
Oh, no, yeah. And this question, the difficult part is dividend is not given. You need to figure out the dividend. The tricky part is there. But in the exam, I gave you the dividend. Dividend is $200 in the exam. I can tell you now.
The dividend is $200.
No, not for this one.
Oh,
For the
For
exam.
exam.
Yeah, exam is easier than this.
write that down.
Exam dividends.
Dividend is $200, but it's given.
But you give,
Right, that's going to
she gives it in.
Yeah, but I remember now. For this question, dividend is not given. But see, for income statement, you can stop here. For income statement, you can just stop here because you know how much is your net income. You can stop here. See, it's not you. And then after you got the EBIT, you use EBIT minus your interest expenses. That will be your taxable income. Right. Just like we pay tax after, like you deduct everything. You deduct everything you can, and that's your taxable income. Okay. And then we pay tax based on how much is your taxable income. So yeah.
Now what is that EBIT stand for?
Yeah.
Just for taxes, depreciation. I know we use that at Yeah. EBITDA is a margin, but it's a little. This one is a little short. I want to see if it's the same thing.
So somebody.
Interest, taxes, depreciation, income tax.
It's earning before interest and tax. Yeah. EBITDA is earning before interest, tax, and the depreciation, amortization. Yeah. So if you use sales, I didn't put it here because, but sales minus cost of goods sold, that's EBITDA. I can add one column there. But anyhow, that would be the EBITDA. But this is EBIT, or it's operating income. And that one is called gross income. But basically, you use this, this is your taxable income, and then if, for example, the company's tax rate is 34%, and then you use your taxable income multiplied by tax rate, that will be your tax. And then you subtract from taxable income, that's your net income. And for income statement, you can stop here and then consider this is a complete income statement. But for our question, let's figure out how much is the dividend. More than that. I think the dividend is over 6,000 something. Yeah. You use this information, retained earning, use this one. Retained earning, think about this is your saving account. And then your saving account have dropped by how much? Just this is how much you have in your account. A year later, it's a lot less because you take the money out and pay to your investors for dividend. So
The net income. Your shares. So you divide the net
So
income
return-
by the number of shares. And that'll be your payout ratio.
yeah, retained earnings. See, return over here. This is retained earnings. This is how much money you put away or you take out from your bank account. So you see how much. So retained earning in 2018. This is the change. This equals to the change for this number and this number. So just like you use 2018's retained earning minus 2017's retained earning, that will be like how much money you take out of your account. So, and that will be the changes in retained earning. You see, so just like this is your account, and a year later it's $2,500 some dollars less. Yeah, so because you took it out, you took out some money from your account. So. Because, for example, you paid a big dividend.
Because you need to make the difference from just saying like the balance went down.
The dividend, this number has to equal to the difference between these two.
That $3,000, but they need to lose an extra $3,000 on top of that. So then it's like $6,000.
Yeah, it should be this number, 6,375. But you see, well, I didn't do,
3843.
yeah, you see, so,
Oh, I got you.
That's subtracting the return earnings.
well, you use net income minus this dividend, it equals to this number. You see, net income minus return. Net income is your profit, and then some of the profit you use it to pay the dividend. Now it's not enough that year, so you not only use your total profit and pay dividend, you also take money out of your saving account, return earning account. You see, so this number 2532 equals to this minus that. So this is like your saving account. This is a year ago saving account. So how much you take out, it's this number. So your return earning has dropped by 2532. If you use negative 2532 add to 2017's return earning, it will equal to this number. It's just like your bank account is 6,357. You take out 2532 and paid yourself, and then paid yourself. So you not only, this is your save, this is the money you make this year, you also take out from your bank account 2532, because you see the bank account value dropped by that much, and then you pay dividend, is like money you pay to yourself. So you pay to yourself. So you not only pay to yourself from the money you made that year, which is net income, you also take money out of your saving account, return earning account, and pay to yourself. So dividend is 6,375. So where does this number come from? It's 3528 minus 6357. That's the drop in values for your return earning. That's money you take out and pay dividend. So your dividend is not only net income, but also the money you take out from return earning. So now if dividend we don't know how much, but if you got the correct number, the return earning should be just the same as the difference between the return earning of 2018 and 2017. These two. So this is a complete one for income statement.
And where did you get the dividend number from?
Well, you use 3843 minus the difference between 3825 and 6357.
I thought that's 2,532.
The equation should be net income
Because you need to make that difference, but then
and the return earning of 2018
so you have to overcome the net income and also use that $2,000.
minus
So what am I looking at?
so this is dividend. So this is the
6357,
yeah.
which is your retained earnings from last year.
Okay, perfect. Okay.
Yeah, so
Equal to how much?
it makes sense, right? So you should use net income minus dividend to get your return earning. And return earning is just how much money you put away or take out from your bank account, from your return earning account. So, but to get this return earning, you can compare the differences of return earning account in the 2 years. Yeah.
Does dividend have a different meaning when we're talking about accounting?
It's the same. It's just the money paid go back to the shareholders.
Are these real numbers that you're using? Like, are we looking at a real company here?
Yes.
I've never heard of a company paying out almost like 16 or 17% in dividends. I don't know, it just doesn't.
Okay, so
It's really risky. It's probably really risky.
well, company also, well, for dividend, company also like because the problem is company try to maintain their dividend like constant. If the company start paying dividend, they want to continue pay and increase the dividend.
No, I know that.
So you see, to be honest, see this is the company. Like I was using this one for undergrad class. So this is information. Yeah, it's Precision Tools 2008-2009 balance sheet income statement. I just got the information from there and then in the end just changed the orders.
It's a small company.
Anyhow, this is at least this is an exercise. At least this is an exercise for textbook questions. Yeah, but see, I have the cash flow statement results here, but let's don't look at it. Let's give it a try. Let's practice.
The cash flow statement?
Yeah, it makes sense, right? But anyhow, you see, the difficult part is to figure out the dividend. Yeah, it really doesn't make any sense because the return earning is just well, they can use it, right? Because they want to maintain the constant dividend. So another way to do that is just raise money from the stock market or debt market to pay the dividend. Or the easy way, just you get the money out of your return earning account, so there's no cost at all to do so if you issue debt to pay dividend. And that's very common practice. The company will raise debt to pay dividend. But GM do so and GE do so. Raise and issue debt. You see, so it's very common practice because they want to maintain their dividend, like yeah. So, but anyhow, you can check you can find many reports in that. A lot of the matured companies, they don't want shareholders to be disappointed because they try to keep the image and get the shareholders like confident in their company, so they will do so. But at least they pay dividend from return earning account that's cost-free. It's the best way, best solution. Yeah. So this is the income statement. You see the structure of income statement is just you read the information, put in the numbers, where you see it's suitable, and then